Stock market cooked. Y'all know the vibe, man. It's your boy Darian, DWaugh, the co-creator of Think and Jam Wealth. And today we're going to get into exactly what the hell is going on in the stock market and why we seeing all this red. You feel me? Without further ado, we going to get straight into it. We're going to break down the fear and greed index, you are. So, boom. We are officially in fear. You feel what I'm saying? And don't remember, last week, a few days ago, we was just in greed. You see what I'm saying? So the market has really done a total 360. And the interesting thing about it is there hasn't really been any big catalyst to cause this. You feel me? I think the top three things that could be causing this is the fact that Kevin Walsh has been announced to be the new Fed chair. And Kevin Walsh is historically hawkish, meaning that he leans towards not cutting rates. Personally, I don't think Trump will pick somebody who's not going to cut rates. So I think he got a deal going on in the back end. Me personally, I don't know though, allegedly. Second, we had a really bad jobs report today. The jobs report with the jolts, the challenger, all the stuff that I'm going to go over was really bad today. Like, it was bad, bro. It was bad. And lastly, AI. Everybody's stressing about AI, and it used to be there's an AI bubble, but now it's you're spending too much on AI, and AI is going to take over everything, including software. So that's why we're feeling a lot of heat, because all the software companies like the Microsofts, like the Amazons, like the Zetas, like the what else? There's a lot more software companies out there, the Adobes. They're all getting smacked right now because everybody thinks AI is going to take over them rather than them thinking it's an AI bubble. So I don't freaking know. They gotta pick a poison and pick a side, you were. But we're gonna get into the actual jobs report and everything that came about it, right? So boom. Let's go to the economic calendar. As y'all can see right here, the challenger job cuts. This is essentially how many jobs were cut for the month of January, right? I ain't gonna lie. This was bad. The previous was 35K, right? The actual was 108, bro. That's bad. Year over year, it's up 117%, bro. That's like bad. That's a lot of jobs being cut right there. On top of that, we had a tick up in initial jobless claims, meaning more people are filing unemployment claims. You feel what I'm saying? It was supposed to be 212. That was the expected. Now we at 231. You feel what I'm saying? Continuing jobless claims ticked down a bit. We expected 1850. We're down at 184. But then we get to jolts showing job openings, and we missed by big. We were expecting 7.2 million job openings. Instead, we got 6.5 million job openings. You feel me? So we missed on like everything job wise. But the most biggest red flag to me is this, bro. This is crazy. You telling me it was the last month we had 35,000 jobs cut? Now we got 108,000 jobs that was cut in a month? We up 117% year over year? That's bad, bro. I ain't gonna lie. So if the market wasn't correct for this, I would understand, bro. But the thing is, the market's just correcting this to correct. It's not even correcting. Let me correct myself. You feel me? Because we're not down 10%. 10% is a correction. 20% is a drawback. You feel me? We're not even near 5%. We're at 2% right now. You feel what I'm saying? We're just feeling it a lot heavier because it's being smacked up by AI stocks and SaaS stocks, software stocks. You feel me? Because everybody think ChatGPT is about to take over, I don't know, Zoom or Zeta. When in reality, these companies are going to use AI to amplify their products rather than get taken over by them. You feel me? But I digress. But yes, I think this is bad, bro. This is really, really bad. I got some numbers that goes over everything a little more in depth. So let me pull that up for y'all. That's bad, bro. I ain't gonna lie. Let me pull it up real quick. Boom. Boom. Yeah, man. This is bad. All right. Numbers is pulled up. So for the job cuts, we are up 205% from last month, 118% year over year. That's insane, y'all. The massive cuts come from big companies like UPS. We see UPS cut 30,000 jobs. Amazon has cut 16,000 jobs, mostly because of AI and how it's generating a lot more profit and pretty much downgrading exactly how much workers are needed within the workplace. For me, then also for the weekly jobless claims that we talked about, continuing claims rose up to 1.84 million. We talked about that already. It's rough, bro. It's rough. It's rough, man. And on top of that, with the jolts, we had a 6.54 million jobs that was opened up. But what we're seeing is there are now more unemployed people than open jobs. We have roughly 7.5 million people that are looking for employment who are unemployed. And then there's 6.5 million jobs. So overall, the job market's kind of cooked, bro. The job market's kind of cooked. If y'all want one more, the quit rate right now for people who, pretty much gauging how much people are quitting at their jobs, it's at 2% right now. A 2% rate, 3.2 million quits in total, which is 2%. Typically, that's way higher if the economy's like booming because people be like, screw this job, I'll go find another one down the block. But in this case, people are like, no, job market's cooked, I'm hunkering down. You feel me? So, it's looking bad, y'all. But here's my thing with that, right? That's why I don't believe this Kevin Walsh theory. Because the numbers are saying job market's cooked. We're looking at other data out there, be the CPI, PCE, or if we look at Trueflation CPI, Trueflation PCE. And for y'all that don't know what those are, Trueflation pretty much tracks inflation right now rather than what CPI does, tracks it in the past. You feel me? Those are at record lows, bro. So, like, I don't know. I don't know why this market's pulling back. That's why I'm telling y'all buy the dip, because I don't really see any logistical reasoning as to why it should pull back like this. You feel me? But let's do some technical analysis to see where else this market could go, okay? So, boom. I was charting up Zeta. Let's look at the SPY. So, y'all see with the SPY here, I'm on the 1 year, 1 day chart here. We broke through the 50-day moving average here, right? These lines right? So we broke through the 50-day moving average. So now we're in no man's land right here. So we have a lot of room to the downside. Remember, we had the last time we broke through the 50-day moving average, we had this chart. You know what I'm saying? Bear with me, y'all. I'm mad sick. Bear with me. So, yeah, this trend line that was broke. Remember, this is that rising wedge that we talked about. Rising channel right here. We broke through the 50-day moving average. Now we're down here with this. So essentially, we're in no man's land right now. We could have a lot more to the side. This is my 50-day moving average. We have my 200-day right here. It could get scary. It could get scarier. But we also could see just a rebound from here. From the last time we touched here. I remember I said this the last time, bro. I said this the last time we touched here. And I was like, yo, it could get scary, but it could rebound here, right by the 50-day moving average. So I personally think it will rebound because there's no real thesis behind why it's pulling back. I could understand if we were hiking rates. I can understand if there's more crazy tariffs. I can understand the geopolitical stuff. What has happened today or yesterday to crack the whole thesis of the market? Nothing, bro. I truly think this is just a natural pullback. Crypto? Good God. Good Lord. I don't know, broski. Listen. Nah, let me calm down. Crypto is pulling back. I honestly don't know why. I don't know why crypto isn't getting a bid the way that gold and silver did. because the dollar is weakening, and usually when the dollar weakens, people run to other securities like commodities, crypto, Bitcoin. It's not the case right now. It's not the case at all right now. So we'll see. I stay low and keep firing if you in crypto. Okay, at this point, this is the IBIT. This is the ETF that tracks Bitcoin. For me, we're in no man's land here. So we could see something that's to $28 down here. Maybe that's 50K on Bitcoin. I'm not sure. You feel what I'm saying? But my thing is, with Bitcoin, it always goes back up, no matter what. You feel me? And I think that goes for say with the whole market, bro. If you win names that are strong, and we're in names that are strong, powerful, and impactful in the economy, and have good numbers, you buy this dip, bro. You don't throw your whole savings into the dip, but you dollar cost average every day and put a piece by piece by piece into the market. Either it be crypto that you're bullish on, either it be companies that you're bullish on, whatever the case may be. You don't panic, and you just dollar cost average. You set and forget. Because I'm telling y'all, based from my perspective, and the peoples I talk to, and we all investing, we're all investors and all this, that, and the third. This ain't about nothing, bro. This ain't, but there's no reason why Hood, oh, excuse me, that's tough. Why is Hood $72? What has changed about Hood? Hood is a great company. They had smacked the doggy out of earnings the other day, bro. Bro, Amazon has had earnings. Why is Amazon, oh my God. Wait. There we go. Why is Amazon? Amazon's at like $200 right now. At $199. Why is Amazon at $199? They just had record earnings on AWS. Their number one margin driver. Like just today, bro. Just today. You know why? Because they're scared about CapEx. Oh, they're investing more in the AI. They're putting up $200 billion in the AI. But what's making them money? AI. Y'all see what I'm trying to say? It don't make sense, y'all. So don't panic. Don't worry. Keep dollar cost averaging. Keep buying the dip. It will be all right. Don't throw your life savings in the dip. Your dollar cost average and take your time. Because like I said, there's a lot more room to the downside, bro. There's a lot more room. But you got to participate or you're going to be mad when we back up to 700 on the SPY. And you're like, damn, I missed it. For me, just calm down. Dollar cost average because there's no thesis changer behind this. AI is still busting, causing crazy earnings and profits. Rate cuts are gonna come because the job market is flamboyantly cooked. I don't care if Thanos himself says he not want to cut rates. Kevin Walsh don't cut rates, bro. Trump want to put him in a position to not cut rates. You feel what I'm saying? That's all I gotta say, man. Listen, it's your boy DWaugh. Thinking Gen Wealth. Keep dollar cost averaging. Keep firing, man. I'm out of here.